Hello friends, Swaraj here. Today is 21st November and today we are going to discuss about J Kumar Infra Limited. So J Kumar Infra Limited is basically, as the name suggests, infrastructure company. It is involved in many highway projects and many national highway and both state highway projects, and it is an emerging company right now. Why am I discussing about J Kumar Infra? Because what has happened in so many years is that the infrastructure sector in India has been failing, and it has been failing at a very fast pace. And many of the companies like IRB and IRB Infra and many other companies, they have gone into huge losses and made huge and they have basically on the verge of getting closed. And the reasons for that is that the government rules on infra projects are not very open, and also there is also a lot of politics that is involved. So many companies which were very successful like IRB and Hindustan Construction, they have faced a lot of losses, and they are right now the balance sheets are loaded with huge debts. So if you want to invest in an infra company, you always have to look for an infrastructure company which is very much in a good profit consistently. It makes a good amount of profit, which has a very low debt on its balance sheets, and also it is improving its sales and its revenues year on year on a very good basis. And if the balance sheet of these companies are light and they are making consistently profits, it also shows that the owner of these companies or the operators and promoters of these companies are very much intelligent, and they know which projects to pick up and which projects to leave aside, and they are also very competitive in bidding the projects and making profits out of it. So why am I talking about an infrastructure company? Because infrastructure is one of the largest, or it can also be called the largest sector in India, and because of the level of, as you might have seen, still the quality of infrastructure in India is very bad. And if the economy has to go to $5 trillion, which the government is been targeting, the infrastructure also has to grow at a large pace. So there are going to be lakhs and lakhs crores of projects that are going to be brought out by the government, and many of these companies will get opportunity to work on these projects. So there are going to be both state level projects and also national level projects. There are already many projects which are being launched, but since the economy is so big and since the population of the country is so big, no amount of infrastructure is ever going to be enough. There is always going to be a potential of some new project coming up, some new improvements coming up. So for that reason, you have to pick only good quality companies, only the companies where the promoters are very intelligent and they keep their balance sheets in a good structure, so that in the bad condition of the company they can just go ahead and pick up, take some risk, and then stay floated. So J Kumar Infra, so the code is JKIL on the stock exchange. So J Kumar Infra is basically right now a small cap company, because the price has dropped from 450 rupees, somewhere it was around 2016, and it has dropped to 170. It is trading right. In my portfolio, I had bought this company around 143.8 rupees, and I am sitting on a profit of around 18% on this, and this is in a matter of like 2 months right now. But I did suggest this company because still this, on my charts, I was able to see that still there is not a huge bull run on this. But now looking at the technical charts, I see that the bull run is going to start now. My prediction on this company is, if you buy now at 170 rupees, you can easily achieve a target of 300 rupees within the next 18 months, and that is a gain of around 58% from this price point. So the logic behind suggesting this company, let's talk about the technicals, let's talk about the balance sheet and sales, the sales of the company last year, that is the revenues that they get from the projects, was that is last March 2019. It increased from March 2018. It was 2100 crores something, and the revenues increased to 2800 crores. The profit also increased accordingly, and it is a good amount of 5% net profit margin. The loans of the companies are also very low. The reserves are at, if you look at the balance sheet, the reserves are at 1600 crores, and the secured loans are at around 600 crores. They are making profits, and then they are again converting into reserves, and their reserves are also increasing. So the company is in a very good momentum. The promoters, obviously we can see that they have pledged their shares to raise some loan, and that is very natural, because the situation of the whole infrastructure sector still is not that great, but it is slowly picking up. So if the promoters did also remove the pledge of these shares in coming years, the stock will even rise even further than 300 rupees for sure. It might go back to the price of 450 rupees, which was in 2016. So there is a huge potential for the price to increase even from this point. But the only thing you have to do is you have to keep a long-term view, because infrastructure basically is a long-term view sector, and such companies which are very low in debt, you have to buy now and then keep it long for many years. And when I discuss people in J. Kumar Infra and discuss people who are knowledgeable about infrastructure, from them also I come to know that J. Kumar has been very much aggressive in bidding for projects, and probably it might again rise the potential of market cap rising, that is the value of the company rising to 3000 crores. Now it is 1300 crores, so 3000 crores is also very realistically possible. And the PE of the company is also around 6, so that is price to earning ratio is around 6, which is very low. And as the government is promising $5 trillion economy, these infrastructure projects will be rolled out, and definitely J. Kumar, because of its reputation and everything, will also be getting a lot of projects, and the company's profitability and revenues also will increase. So I would suggest you to buy at this point. Keep a long-term view of 18 months or 2 years, and you'll see the price rising to 300 from the current level of 170, and then beyond that also, if the promoters remove the pledge of the shares. What is pledge of the shares? If some people have not understood, is, say suppose I am the owner of the company, or say suppose I am a shareholder of the company, promoter of the company, I will go and keep my shares. Say suppose I am the promoter that is major shareholders of J. Kumar Infra. I will go and keep these shares as a security against a loan from the bank. I'll take that loan, and then what I'll do is I'll use in the business to increase the profitability. What happens if I don't pay back the loan, and if they keep a stop loss on these shares, the banks, what happens if that stop loss is hit? The banks go and sell the shares. So many of the companies like Yes Bank, Reliance Infra, Reliance Capital, where people have lost a lot of money, there the owner had kept the promoter pledge, and they could not pay the loan, so the banks just sold it, and that is the reason the price dropped. But here we can see that the balance sheet is very strong, and the promoters, some years down the line, they will definitely remove the pledge, and they will reduce their debt, or they'll remove the pledge by paying some of the loans from their balance sheet itself, and then again there will be a new re-rating, and the shares will start rising again. So there is a huge potential here, but as of now I'll keep a target of only 300 rupees, and you will and keep a very long term view. That is what I'm telling, and keep a stop loss of 30%. Also take a second opinion from your own broker, or say is from your own financial advisor, or whomever you think is an expert in stock market. Go ahead and take their opinion also. Just because I'm telling you to buy something, Don't buy it blindly. You also do analysis on your own, your charts, that is technical analysis and also fundamental analysis from balance sheets and profit and loss figures. So do that and take a decision. But according to my suggestion, if you buy right now at 170, there is a potential to make 300 target reaching 300 rupees between 18 months to 2 years. Now we are getting a lot of suggestions from many users. One of the users suggested to make a video on Trident Limited. One of the users suggested to make a video on the pharmaceutical sector, and there was another new request to make another on Philips Carbon. So I'm liking this participation, and I hope that people keep participating and keep suggesting me to produce new data, because there are more than 4,000 shares, and there are at least, if you consider 20% of that, that is 800 companies. We can easily make a lot of money. There are lots of opportunities. So I also sometimes miss those. If you guys suggest in the comments, I will also go over it, and if I find it suitable for a video, I will definitely make a video. In the coming days, I will make videos on pharmaceutical sector and Trident and Philip Carbon, as other users have suggested. So I am liking the support that you are providing. Please continue your support, and please keep sharing and liking the videos. Share it with the people who you think might find it useful. Thank you very much.